So now let's go to the step number 7, which is intercompany owings. What it is called? Intercompany owings. So step number 7, intercompany owings. So that means, my dear friends, intercompany owings on consolidation, it has to be cancelled. Got it? Intercompany owings, what we have to do on consolidation?
Cancel.
Array, in your book, it is receivable from holding company. So for holding company, it is payable. On consolidation, merging plus minus, what will happen? The impact?
As like application.
0. Correct?
Yes, sir.
It is a cancellation. So that's why for one company it is receivable, for other company payable. On consolidation, receivable and payable will nullify. So it will become 0. Only outsiders only will appear as a liability or asset. Got it?
Yes, sir.
Yeah. So now let us go one on one, my dear friends. So what and all we have to do with? First, understand one on one. One on one. Let us go. So first one. So we will go with debtor creditor. Wait. Before that, my dear friends. So please, in step number 6, what is the summary? Whatever the investments are there, correct? Those investments. So please, if you have not updated, update it on consolidation. Somewhere here, somewhere note if it is there. So kindly please update on consolidation. Note on consolidation investments will be cancelled in holding company books. Yeah. What will happen? Yeah. So that is in CFS, investments will not appear. Investments will not appear, and share capital of subsidiary will not appear because shared between NCI and holding company. So this NCI in step number 5, holding company in step number 6, we have shared. Got it? Yeah. Sir, why? Because look out, in step number 5, my dear friend, step number 5, in non-controlling interest, whatever the things are there in earlier discussion what we did. So look out here, share in equity share capital already taken. For example, here 80% if we have taken means balance 80% is holding company's share capital. Holding company's share of share in subsidiary company's equity share capital or not?
Yes, sir.
Yeah. So that here, suppose if 80% means here we have taken or not that 80%?
Yes, sir.
Yeah. So that net impact is appearing as a goodwill or capital reserve. Yes or no?
Yes, sir.
So therefore, on consolidation, my dear friends, it is a capital means since you are in holding company, capital means only holding company share capital only will come. Subsidiaries company's capital, so non-controlling interest and holding company would have been shared. Non-controlling interest in the name of non-controlling interest will appear. Holding company's share of equity share capital will be compared with investments what they made, and it has been cancelled. That net changes will appear in the name of capital reserve or goodwill. Got it?
Yes, sir.
Yeah. So that's what share of net assets. That is, share capital is so much and I have invested so much. That net impact is goodwill or capital reserve. We have we have made it appear in your CBS. Got it? So therefore, on consolidation, your investments also cancel. Subsidiary companies capital also will cancel. Net result, net effect, goodwill or capital reserve will appear either asset or liability side. Got it? Under reserves. Now let's go with intercompany owings. So intercompany owings, my dear friends. So first let us go with A. So first is debtor creditor. Debtor creditors. Correct? So now what you have to do with, my dear friends? So total debtors, total creditors. Here one example I am showing here. Yeah. So now take total as per balance sheet. Both companies you have to take. You understand? Both companies total debtors and total creditors you have to take. Out of that, what you have to do, less intercompany owings. That means, for example, 1 lakh total debtor, that is 80,000 is a holding company, 20,000 is a subsidiary company. Total debtors is 1 lakh. Correct? Like that, creditors 50,000 in holding company, 30,000 in subsidiary company. Total 80,000. So debtors you have to take 1 lakh and 80,000. So out of that, imagine, suppose if the problem says, so common there is a receivable and payable, that is debtor creditor relationship is 10,000, common owings is there. That is either it is a subsidiary has to pay to holding company, or holding company has to pay to subsidiary, whatever it might be. So that means it will be in one book up to the extent of 10,000 only. It's a intercompany owings. Are you understanding?
Yes,
Yeah.
sir.
So that 10,000 I will eliminate commonly in debtor also and creditor also. After elimination of that both, whatever I will get is what? Balance for CBS. Correct? Yeah, so total debtors as per balance sheet I will take, total creditors as per balance sheet I will take. So minus intercompany owings, balance what you get is, what? Balance for CBS.
What?
Balance for CBS. Are you understanding slowly?
Yes, sir.
Yeah. So like this, my dear friends, so in all the case in this step we are going to do in this exercise only. Total as per balance sheet we will take, less intercompany owings, balance is CBS. Balance for CBS in total. Yeah. Like next, let us go with B. Bills receivable or bills payable. Bills payable. Are you understand? Yeah. So here what you have to do, same thing. What as per same total as per balance sheet, total debtors as per both the companies you have to take, and this and the less common owings. Same treatment is same as above. Yeah. After B, let's go to C. Intercompany borrowings. So including interest. Are you understanding?
Yes, sir.
Yeah, it's like loans, my dear friends. Loans. So here only you can take alternative instead of debentures there. You can take here also and you can cancel. Are you understanding?
Yes, sir.
Yeah. So here loans. So that is here loan receivable. Here loan payable will be there. What will be there? Loan.
Well,
Loan given.
yes, sir.
Loan receivable. Here loan payable.
Able.
Loan payable. So whatever amount is there, this is as per balance sheet. As per balance sheet total. So less intercompany owings. Intercompany owings. So same thing, if you minus, it will become a 0 or not, whatever might be. Correct? So total. Only outsiders will come in CFS, my dear friends. Intercompany borrowings will be cancelled. Yeah. So balance to CBS. Balance to CBS. Are you understanding slowly?
Yes, sir.
So then lastly, D, unrealized profit. Unrealized
Profit.
profit. That means unrealized profit on whatever the goods or inventory sold. Are you understanding? Unrealized profit. So here you have made the some supplies, either it is asset sold or goods sold, whatever it might be. On that, if the profit has been made, and if that asset or if that inventory, if it is laying in a stock, then only URP will apply. Got it? So here you have to calculate total URP. Total URP is equal to URP if if remain unsold on date of consolidation. Remain unsold on a date of consolidation. Yeah. So total URP you will calculate. So whatever URP comes, so this total URP. Are you understanding? Total URP how to calculate. So that is value into profit percentage. How you will calculate? Value into GP ratio. So charge what is the total URP. Correct? Now here, if it is upstream, sorry, if it is downstream, so 100% to be shared by holding company. Therefore, step number 8. Correct?
Yes, sir.
Yeah. So if upstream be shared by holding company and controlling interest. Correct? Non-controlling interest. Non-controlling interest. So that is total URP. So that divided into holding company and NCI. So NCI's portion and holding company portion will go to step number 8. NCI's portion will go to step number 2. Sorry, step number 5. Step number 5, non-controlling interest. Got it?
Yes, sir.
Yeah. Have you come across in step number 5? We have shown step number 5. If you are not there, so please come and see in step number 5. Yeah, in step number 4 and step number 5, I have deducted unrealized profit. Can you see this?
Yes, sir.
Only if it is upstream, non-controlling interest portion I have deducted here. Correct? So holding company's portion will go and deduct. Holding company's portion profit will be eliminated in step number 8. Step number 8. So now, so up to this, whatever we have discussed, my dear friends, in unrealized profit, so step number 7 is complete. So in step number 7, we are going to analyze in, it is not restricted only for 4. Yeah, here just simply intercompany owings is the title. So here examples I have taken was debtor-creditor relationship, BRBP, and loans intercompany borrowings, including interest, and also lastly unrealized profit we have taken into consideration for analysis. Got it? Yeah, so you can take in this case debentures also. So debentures, since if it is an investment is there, so intercompany owing, suppose if it is there itself you can cancel on debenture investment. So you have to calculate the capital reserve or goodwill. So this is step number 7. Now let us go to the last step for our case of consolidation. That's fundamental steps. Yeah, fundamental steps is step number 8, reserves for CBS. That means here especially revenue reserves. What is that? Revenue reserves for CBS, consolidated balance sheet. Reserves for what?
CBS.
Consolidated balance sheet. Correct? So here, so particulars. So general reserve, P&L. General reserve and P&L. So here, so first we will take up with my difference. General first is to start with. So now only Pramod, you have to touch financial statements of holding company. Here only you are going to add. Are you understanding?
Yes, sir.
So first, balance of holding company. That is a holding company balance as per balance sheet. Holding company balance as per balance sheet. Are you understanding? So now here
Yes, sir.
holding company. Now only holding company's profits I am taking. So for this I have to add subsidiary profit, which I have analyzed in step number 3, 4, 5 or not. Step number 3. Yeah. So now let us go. So here what we have to do, add share from subsidiary. So here not only subsidiary, first subsidiary. Suppose if associate is there, share from associate. If joint venture is there, share from joint venture. All 3 will come. Got it?
Okay. Yes,
Yeah.
sir.
So here only, suppose if it's only subsidiary is there, only subsidiary, share from subsidiary. That means share from other companies you have to add. Got it?
Yes, sir.
Yeah. Now here share from subsidiary, we have the, since we are in revenue reserves, because capital portion, capital profit already we have consumed in step 6 to analyze cost of control or not.
Yes, sir.
Yeah. So now go and see in step number 4 in earlier session what we have discussed. Look out in step number 4 what you get. So here look out. So share of non-current interest will go to step number 5 over. So holding company's capital profit will go to step number 6, already consumed. That means balance. So whatever revenue reserve and revenue profit we have there, that will go to step number 8 or not? Revenue reserves.
Yes, sir.
Correct? That portion will come and add here. That portion will come and add here in case of here. So share from subsidiary. So it is revenue reserve. Revenue reserve will be added in general reserve. Yeah. So then revenue profit, it will be P&L. This is general reserve. Keep in mind. So it will be added P&L. Are you understanding slowly?
Sir.
Yeah. So after adding this, my dear friends, after adding this now, so you have out of P&L few adjustments we have to make. So that is what unrealized profit. Have you come across?
Yes, sir.
Yeah. So less unrealized profit. So holding company share only. So this is step number 8 you have to check. Got it? So this unrealized profit would have been included in P&L. Therefore only in P&L we have to eliminate or not?
Yes, sir.
Correct? So then Pramod, so you would have come across in step number 6. In step number 6, have you come across liability route?
Yes, sir.
Yeah. In liability route, we have cautionally we have mentioned pre-acquisition dividend wrongly credited. Pre-acquisition dividend wrongly credited in P&L. Pre-acquisition dividend wrongly credited in P&L. So that means actually pre-acquisition dividend has to be eliminated from cost of investment.
Yes, sir.
Yeah, but instead of reducing in cost of investment, wrongly if they have credited in P&L means income will show higher or not?
Yes, sir.
Yeah. Now because of adjustment, now what you did, that pre-acquisition dividend, now you have taken to that rectification you have did. So from cost of investment you have reduced in step number 6 in a same stream. In a profit also you have to eliminate or not?
Yes, sir.
Yeah. Less pre-acquisition dividend wrongly credited in P&L. So that you have to eliminate. Are you understanding slowly?
Yes,
Yeah.
sir.
So this is minimum adjustment. Suppose if any problem specific is there, any nominal accounts adjustment that we have to take into consideration while going in a solving a problem. Yeah. So this is what reserve for CB. That means revenue. That's a general reserve and P&L account for the purpose of consolidated balance sheet. Got it? Along with that, in step 6, suppose if capital reserve is there, that also will come in the balance sheet as a form of other equity. So in the balance sheet, when we are going to present other equity, that the schedule of other equity reserves and surplus, there general reserve, P&L and capital reserve. This one we have to take or not?
Yes, sir.
Yeah. So here, so I'm not showing here total reserves. Here total general reserve and P&L we have taken. In balance sheet presentation, other equity it will come. Got it? Yeah.
Yes, sir.
Are the steps relating to consolidated balance sheet, my dear friends. Steps relating to consolidated balance sheet.
Well,
Yeah. So next, what we have to discuss is format of presentation of financial statement. So that if you understand format of presentation of balance sheet, so then consolidation basic requirement is over. Then we can go for problems in next sessions. Got it?